Meow, everybody, Cantonese Cat here. I want to spend some time talking about a few fintech stocks. And I'm going to try to rank them based on their longer term technicals, longer term trend, to try to see if I can give you an idea in terms of what Wall Street is currently more interested in, which one they're more likely going to want to pump compared to the others, and why you might be getting a little bit frustrated looking at fundamentals of certain stocks and why they're not pumping as much as the other, even though the fundamentals may look better to you versus others. It's all about narrative, it's all about psychology, it's all about hype, and sometimes it's all about what everybody else is doing rather than the fundamentals. Now, don't get me wrong, I think long-term fundamentals still matters a heck of a lot, right? It's gonna matter, it's always gonna matter, but if you give it enough time, it will matter. Sometimes in the shorter term, it may not reflect as much. Sometimes in a shorter term, certain stocks are just going to have a lot more momentum than others. And I'm here to kind of show you what I meant by that. Now, the first thing I want to look at is really a longer term moving average. And one of my favorite ones to look at is really the 20-month moving average, and I'll show you why. This is a monthly chart of Bitcoin. I pulled up the Bollinger Band right here, the upper Bollinger Band and the lower Bollinger Band. And you also, with the Bollinger Band indicator, you also get a basis here, which is, because this is a monthly chart, this is going to be the 20-month moving average. And as you can tell, I like to use the 20-month moving average because that really does tell you once it starts to go from downward sloping to upward sloping, usually it really coincides in terms of the beginning of a pretty powerful bull trend, right? For example, I can show you the past two cycles. If you just look at the 20-month moving average and see when it starts to crawl up, you're really starting to see kind of like the beginning of a pretty parabolic move right here, right? So here is an example where it was up, it was down sloping here, and then when it was up slope, it really becomes a very powerful bull trend, right? And when this happens, you had a Bollinger Squeeze right here, which tells you that price has been going sideways for too long. It's going to end up, making a parabolic move one way or another. And because the 20-month moving averages tend to be curling up, and because the price is above the Bollinger Band, the upper part of the Bollinger Band, most likely probability-wise is going to keep on riding up, right? Until the trend gets exhausted, until you start to see the 20-month moving average, instead of going parabolically up, it starts to really curl down, right? This is when you start to see, okay, maybe there's a little bit of a trend exhaustion right here. And sure enough, the trend has exhausted, and the price went down to the lower part of the Bollinger Band, right? And this is when it really went sideways or even a little bit downward sloping here, right? And then the next cycle starts right here, where you see that there is a upward trending 20-month moving average curling up, and you really start to get a parabolic move up here until the trend starts to get exhausted right here, and that's when you know things are rolling over. And as a roll over, that's when the bear market really starts, right? Right around here, you can really tell, like for the most part, the bear market is really starting to roll over here. Guess what? Right now, we are having a uptrending 20-month moving average. So this is the reason why I think a lot of people are thinking that this could potentially be a very, very longer bull trend that can keep going up for about a year or two, right? And we're just right at the beginning of this whole potential bull trend. The reason why I want to show you is not so much to talk about more about Bitcoin per se. It's more to kind of show you the indicator in terms of what is in relations to the overall trend, right? So for example, you're like, okay, so you know what, over here it's starting to go up, great, but what if I would have bought here? Well, what if I would have bought here? I would have made a lot more gains, right? Sure. The only problem is that I do buy here. The thing is, I do buy here. I do try to look for other indicators to see whether or not I can time the bottom. The hardest part is that it's very, very difficult to time the bottom. If you try to time the bottom, a lot of times you might end up catching a falling knife. You might think that the bottom is right here. Next thing you know, made another low, right? You might think that this has bottomed over here, but next thing you know, it starts going up and it starts to make another lower low, right? Same thing here. You might think that, it's probably bottom here. Next thing you know, it had this very, very vicious downward move, right? And you could have bought right here, thinking the bottom is in, but it just kept on going down, right? Same thing here. You could think they'll touch the lower Bollinger Band on the monthly. Great, let's buy here, but next thing you know, it actually make it a lower low. So some people do try and catch a falling knife, because if you're able to catch a falling knife right around here, it doesn't matter where you buy it, actually. Eventually, you're probably going to end up being above, right? The only problem is that it's very, very harmful for some people psychologically to try and have to do this, as opposed to certain people who are really trying to find certain indicators to tell you that, yes, the trend is changing and now it's safer to go in. I can buy, and the probability is that it's not going to make a lower low because the monthly trend is going up, the long trend is going up. And that's when you're really starting to think that, okay, there's more confirmation that the bottom is in, the trend for longer term is starting to go up. Let's go ahead and buy, right? And that's when you have a parabolic bull trend from that. The institutions, they probably already have accumulated over here, and then the smart money, if they don't have any, insider information, which hopefully they don't. I mean, I certainly don't, right? But if the smarter money, some of them may already have bought down here when they're trying to see that they're forming a base. Some may be waiting for certain confirmation, such as this, before they pile in, right? And then you have the not so smart money, where they may not be very good at what they're doing. For example, certain hedge funds that are always underperforming the SP 500, they might say, okay, now everybody's piling, let's pile, so they might start buying here. And then you also get the retail investors. A lot of them are not as informed as you to want to listen to a video like this, and they might end up start buying like up here when they think that the trend is confirmed. This is going to be a bull trend, it's going to go up forever, and that's when the trend really starts to exhaust, because that's when the last kind of pile money that are available out there is starting to become pile in, right? And they usually end up being exit liquidity. Now, that's a long-term view here in terms of the 20-month moving average. I'm going to show you another example before I start going into some of the other fintech stocks and trying to compare them all. If you look at the S&P 500 ETF fund, the SPY, you can see a very, very similar thing happen, right? With SPY, it only really made like a true downward slope thing right here. Maybe about 1, 2, and most recently 3 times over the last 25 years. It's only made a downward move for the 20-month moving average, again, just 3 times, right? But let's look at what happens, and also what happens when it decelerates and then starts to reaccelerate again, right? I made a couple arrows up here too for you to look at. So, for example, down here with the dot-com bubble burst, you're really starting to see around here December of 2023 is when you actually have the confirmation that, yes, the trend is starting to go up. It's safe to buy here. Is it safe to buy here? Sure, it's kept going up for years, right? Well, I mean, you never know when a black swan event's going to come. It went ahead and just go ahead and crashed down right here, right? But to most, I still think this is a pretty good indicator that things are looking okay. You can buy here. Most of the time, it's going to work out pretty well for you. Even if you buy here, even if it crashed down, if you continue to hold on to it, sure, you didn't make any gains for about like 7 years or so, but I think eventually this is still going to be a pretty decent spot to buy right around here. Right? Same thing here. If you're bought here, bull trend confirmed, you're not going to really be losing that much money despite of this volatility that's going on, right? And this really started to happen around May of 2010. Some people start buying here, good for them, right? But if you want to wait for trend confirmation, you can buy here, and that would be fine. Same here, right? Let's start to see the 20-month moving average starting to slow down here a little bit. And when it starts to reaccelerate, this is a pretty good spot to buy. When you start to see this reacceleration, that's usually going to be a pretty decent spot to buy. And start to maybe losing its momentum here a little bit in 2018, 2019, COVID, right? Became flat, didn't go down really, but became flat. Once it starts to reaccelerate, that's when you know that there's an ongoing bull trend that's most likely going to resume. It's going to go up higher. Sure enough, it went on for about 2 years, right? And then it started to roll over. And the third time that the 20-month moving average has started to roll over into a negative slope over the last 25 years. Next thing you know, right around October, when this vicious downtrend came back to try to test the 20-month moving average, and it passed. Guess what happens? Pretty impulsive move up, dragging the 20-month moving average to go up again. All right. I just want to show you this as a basis, because if I don't, you don't know why I look at the 20-month moving average, right? I want to look at a few fintech stocks. I'm going to rank them based on how in relation to the 20-month moving average is doing right now. If I don't show you that as a context, you have no idea what I'm talking about. Now, the most bullish fintech stocks, I'm going to talk about 8 of them. The most bullish is NU Holding. This is a Latin America fintech company, and the 20-month moving average has been curling up pretty impulsively, right? If you're talking about technically speaking, this is the most bullish. Now, I don't know whether or not it's because the fundamentals, I don't know whether or not it's because there's a lot of big funds backing, including Warren Buffett is actually a shareholder of this company, right? But you can see that the price has been very, very impulsive. It just keeps on going up, and it's developing a pretty strong monthly bull trend that just recently started not long ago, a few months ago. Most likely, this stock is probably going to keep riding up on the upper Bollinger Band, keep going up. At this particular moment, the most impulsive, the most bullish fintech stock is going to be NU, based on looking at this indicator, right? The second one I would say is going to be AFRM. AFRM also had a very impulsive move up here, which started to drag the 20-month moving average upwards right around here. You can see this is very, very positive slope, right? And you can see that the Bollinger Band has pretty significantly expanded. Just like NU is starting to expand the Bollinger Band, although it doesn't really seem to be expanding the lower part. Maybe because it just doesn't have enough price history as AFRM does. But AFRM's going to be a pretty good second in the fintech stock that I'm seeing out of 8 stocks in terms of the trend, right? The 20-month moving average is pointing upwards. Pretty impulsive price action. Price tend to want to hover around the upper Bollinger Band, right? That's the second one. The third one, StoneCo. StoneCo also this is also another predominantly Latin America company. This also looked very similar to AFRM, where it's starting to kind of hug the upper Bollinger Band. 20-month moving average is also starting pointing up like here, right? So this is probably going to be the second or third most impulsively bullish fintech stock out of the 8, right? Now, another one that is starting to show some signs of it, but it's not as established as the other 2, is going to be Robinhood. You can see that it's really starting to, over the last couple of months or so, it's really starting to come up, although the price is not as impulsive, and the 20-month moving average is not as establishedly crawling up as the other earlier 3 stocks. Is really starting to do that. And this is obviously one of the stocks that I own, that I mentioned to be a buy over the last few weeks, and I've been buying, right? The fifth one I would say is Block, or SQ. SQ, because of the most recent earnings, also was very positive. It also started to drag the 21 moving average, started to go up over the last month or two. And it's starting to kind of develop that bullish 20-month moving average bull trend that we were talking about, right? And then another one of my favorites is going to be SOFI, right? I ranked this one kind of about a 5th or 6th because it's also been kind of crawling up, although it's not as impulsive as the early ones that I'm showing. And also the SQ chart, the most recent candle is a little bit higher. So I'm going to rank SOFI around number 6 because it does have this positive crawling up, but it's relatively still a little bit flat. It's starting to curl up here a little bit. It's just not as good as, for example, Square, when it's really starting to kind of becoming a little bit more impulsive here. Now that was number 6. Again, number 6 is SoFi, right? Number 7 is Upstart. The problem Upstart is that the most recent earnings have dropped the stock down 20-something% in the day. It was starting to curl up, but now it's just becoming flat. So it's not quite there yet. It might take another month or two, depending on how the price goes. I do think that right now it's at a pretty good horizontal support right here. And I do think that most likely it's going to find support right here. And the next thing you know, it's going to maybe spend another month or two trying to repair the damage. And there's a good chance for the 20-month moving average to continue to go flat here. But the problem is that currently there's no confirmation for for this stock, Upstart. It might take a little bit longer, although it depends on you. One of those folks that don't mind catching a falling knife. You can start buying. It's probably still going to be pretty decent because I do see a potential trend change here, right? As you can see, 20-month moving average is starting to flat out here a little bit, but there's no confirmation yet, right? Now, that's the seventh, not the eighth, technical wise. Why this stock has been doing nothing? You can talk about the fundamentals all you want. You can talk about, all kinds of things all you want. The truth is that, technically speaking, it has just suffered too much damage over the last couple of years, and the 20-month moving average continues to be sloping downwards, right? Now, unlike even Upstart, you can see that even Upstart had tried to start challenging the 20-month moving average, right? It challenges once here, it challenges the second time here, even though it's still negative slope. It's really been touching, it's really been trying to challenge that, right? PayPal hasn't even started doing that, which is, the reason why the stock is still kind of a little bit of a dog, and why it is that it just doesn't have a lot of momentum going for it, because it hasn't really even tried to do that. Do I think it's bottom? I think it probably has bottom. Again, there's no guarantee, there's no confirmation. I think it's probably had bottom. I'm gonna, I can show you, again, I've shown you this before in another video, but this look right here, where it bounced from the upper Bollinger Band to the lower Bollinger Band, and it bounced down further to the other side. This happened at the dot-com bubble. You're really talking about this particular pattern right here that I'm seeing, where price have gone from, during the top of the dot-com bubble, it was at the upper Bollinger Band, a little bit outside, right? It popped, and guess what happens? It came down, test the lower Bollinger Band. Instead of bouncing up, it bounced down, all the way down to the other side, and try to get close, or even, I would imagine it probably get close to the lower Bollinger Band here before it bounced back up again, right? This pattern is very much consistent with what I've been seeing with PayPal over the last couple of years or so, right? It went from the upper Bollinger Band, when popped, it went all the way down, touched the lower Bollinger Band, keep on going down the lower Bollinger Band, bounced down, and then touched their lower Bollinger Band on the other side, right? I really think that this looks like a bottoming formation for PayPal. And the thing about PayPal is, do I feel comfortable buying? Yes, I do feel comfortable buying because of valuation. Valuation does matter. Doesn't mean that it's not going to have another leg down. I mean, there's no guarantee, right? I do want to say that because the 20-month moving average is really starting to decelerate on this bear trend, you can see that it's really starting to try to become flattened here, right? And it takes into account that maybe because the last 5-6 months price really hasn't done anything, and as the moving average continues to happen, it's going to take the last 20-month moving average, right? So the price is going to be more stabilized down here as time comes. It can take another 2 or 3 months potentially for the 20-month moving average to really truly become flat. And when that happens, I think that price most likely is going to start actually challenging it, maybe over the next quarter or so, depending on how earning goes, and also depending on how macroeconomics go, right? It can also start to challenge that right around here in the next 2 or 3 months. And then by July, or July or August, I suspect there's a potential for price to actually get maybe even above the 20-month moving average as it's starting to kind of roll up. So I think that that's a possibility. And then by 2025, I think you might be talking about potential, triple-digit PayPal here. Now, if I'm wrong, if the earnings blew out of the water, if the macroeconomics have drastically improved, and you got like a God candle that pushes all the way up here, next thing you know, the 20-month moving averages start crawling up. Now, that you can end up having pretty impulsive price movement, and price might end up getting up, faster than I think. But right now, there's no confirmation. That's the thing. When I buy PayPal, I think I'm more because I have different strategies. I chase momentum, and I do get into a couple of stocks where I do think that the fundamentals and narratives are good. I don't mind waiting. This is one of those that I am more focusing on that part of it. there are different funds that I allocate differently, right? I don't want to just put everything into a very, very high risk location. I do want to spread out my risk a little bit, because even though I think that this is the beginning of a bull trend for Bitcoin, for S&P 500, for a lot of the risk assets, you just don't know, right? So I want to hedge a little bit. I want to be able to buy some stocks that have good fundamentals in terms of valuation. I think the downside of PayPal is probably very limited based on fundamentals and also based on technicals, right? So I want to allocate funds to it. I'm also not a day trader by that much, really. I don't trade much, really. I just more looking at longer term trends, and I may make some trades, over like the next year or two if I see something going way too parabolic and I see that the 20-month moving average is really starting to do something not good, I might start to think about potentially trading in and out of my position. But these are more longer term thoughts. There is a opportunity cost that people talk about, but when people are talking about that, you also have to know that what they're saying is that they are going to try to time the market. They're going to try to time stocks, and a lot of them are successful in doing it, but not everybody is going to be able to do that. So when they say opportunity cost, they may, a lot of times they might coerce you to try to chase something that's shiny. And sure, I think it makes sense if you see confirmation of a 20-month moving average going up, you should buy. I do buy, right? But a lot of times it depends on your strategy. Some people do like buying some falling knives as kind of a hedging strategy. If they find their valuation is good, they don't want to just chase momentum. I still think it's a pretty reasonable strategy, even though, yes, you're going to have some frustrations in the short term, 3 months, 6 months, maybe possibly longer, yes, right? But that's still a valid strategy because there are different styles of different people doing different things, right? I can't fault Warren Buffett for looking for value and being patient. It eventually works out pretty well for him, right? So I just want to kind of share with you what I thought about the 20-month moving average, how it is in relations to price, what is in relations to trend, show you Bitcoin example, show you SPY example, S&P 500 example. And again, if I have to rank all of the momentum for all of the fintech stocks, NU is going to be the first one. Second is going to be AFRM. And Stone Cold is also kind of a close third. And then it's going to be followed by a group of stocks like Robinhood, Block, and SOFI. And then Upstart is going to be after that. And the PayPal is going to be at the very end when it comes to momentum. I don't think I'm telling you anything that you don't know already based on your hunch, but I just want to show you objective data and also kind of what to expect and what you'd be waiting for in terms of confirmation. That's it, guys. It's been over 20 minutes. Thank you for listening. Bye.